Welcome to Satya Skills. In this video, let us learn the basic introduction of capital market, that is what is capital market, what are its features and classification. Financial market is composed of two markets, money market, capital market. With regard to money market, we learned a lot, almost 6-7 videos are there on money market. Now let us learn about capital market. Capital market is the market for long term finance. Remember, money market is for short term instruments, whereas capital market deals with long term. Capital market is a market in which suppliers and the investors provide long term funds in exchange for financial assets like financial instruments. And it is defined as the capital market is a complex of institutions, investments and practices which establish link between the demand for and supply of different types of capital funds. So, capital market is broadly divided into two parts, instruments and markets. Again, instruments are two types, debt instruments, ownership instruments. Markets are primary market and secondary market. Let us look into the instruments. Capital market deals with long term instruments which are used as a means to raise funds for long term capital investments. Capital market instruments can broadly be classified under two heads, debt instruments, ownership instruments. Ownership instruments contribute towards the share capital of the company. Thus, the holders of ownership instruments, that is shares or securities, are the owners of the company, whereas debt instrument holders are the creditors of the company and they enjoy fixed interest on investments. The following are the different types of debt instruments. One is the debentures. Debentures are the debt securities to raise debt capital. Companies issue debentures through public issue. Issue of debentures by companies is regulated by Companies Act, and SEBI is the apex authority to provide guidelines and policy regulations. What is the meaning of debenture? Debenture is a document which creates a debt. It is usually in the form of a certificate which acknowledges indebtedness and a company's seal. Thus, they form loan capital and the holders of debentures are creditors of the issued company. They carry a fixed rate of interest. Now, second one is bonds. A bond is an instrument and a seal whereby one person binds himself to another for payment of specified sum of money at a specified date. The person who binds is called the obligor and to whom he is bound is obligee. Thus, bonds are called obligations. There is no difference between bond and debenture. In India, the term bond is used to indicate instruments issued by the government, quasi-government bodies, public corporations, etc. Debentures are applied to the instruments of the corporate sector, that is companies. In USA, bonds are secured by tangible assets of the company. So, when they are secured by tangible assets in USA, they are called bonds. Debentures are secured only by creditworthiness of the company. There is no such distinction between debentures and bonds in India and UK. Issue of bonds is a method of borrowing adopted by the government and government organizations in India. There are different types of bonds in usage, that also I gave in one video about the bonds. Now, coming to the ownership instruments. Ownership instruments are called shares. Ownership funds represent share capital. Share capital is divided into different parts in equal denomination called shares. Persons who subscribe to the shares are shareholders. Persons who subscribe to the debentures are, remember, debenture holders, they are the creditors, whereas persons who subscribe share capitals are the owners of the company. Now, types of shares. According to the section 85 of the Companies Act, share capital is of two types, equity share capital, preference share capital. Thus, there are two types of shares, equity shares and preference shares. All details about shares, debentures, bonds, I did two videos previously, I uploaded, just you go through that. Now, capital market, with regarding the markets, capital market is having two markets. One is the primary market called new issue market. Secondary market is called stock exchange or security market. Thus, capital market provides base for long term investments and directly contributes to the capital formation and also industrial and trade development in the country. With regarding these primary and secondary markets, I will upload a video soon. That is all in this video.